Hey folks, Jeff Bangerter back with you, talking about 1031 exchanges using the Delaware Statutory Trust. And today I want to talk about a few of the side benefits, things that you may not have thought much about. So the first one I want to talk about the non-recourse debt. So when you think about the lender in a conventional single ownership commercial property type of a thing, so maybe you own a strip mall or an office complex, whatever it might be, generally they want you to put down 20% or even more in order to get financing. And if you have a strong enough credit rating, maybe you do better than that, but bottom line is you're responsible for it. If you go bankrupt, if you don't pay them, your other assets are they can attack those other assets, right? And it's pretty unlikely that you're going to get a non-recourse loan. Well, in the DST, where we do the financing, the DST is the only entity that is responsible for the debt. So it is absolutely a non-recourse debt situation. You do not have to worry about it. You do not qualify for it. You just enjoy the income from it and the tax benefits associated with having debt on the property. But you don't qualify for it. It's not showing up on your financial statement, so it's not impacting any of your ability to get other financing. So I think it really has a real big advantage there. And again, like if you were going to do a tenant in common with a handful of folks, you would have to qualify. It would show up on your credit report, and they still would probably make it be a recourse debt where they could come after your other assets. So this is really, it just kind of cleans everything up for you. There's also limited liability in the DST, right? Even though bankruptcy is very remote, very unusual in these types of structures, if it did happen, you don't have any liability. Your investment, whatever you invested, is at risk, right? Just like any other, let's say you went out and you bought a Sears building, right? I'm picking on Sears, I'm sorry. But let's say you did. You bought one of their buildings and then they moved out. And you had leverage on it. You had to pay the bank, and finally you couldn't pay them anymore, and you stopped paying. Well, you'd have to go bankrupt, and they could attack your other assets. You're liable, right? Well, with this, you're not liable for any of that. So it's a regulated environment too. This is really important. Oftentimes we kind of joke a little bit about our PPMs because they are thick. I mean, it's an inch thick document that you are given to really make sure you understand it. We read those. We have to actually take tests on each offering before we can offer it to you. Well, that's good, right? So we know what we're talking about. But these are syndicated private placements. They are regulated by FINRA, the Financial Industry Regulatory Authority, and the SEC and FINRA they enforce these things. They don't let people just run around and do crazy stuff, right? So I know that there's people out there that are selling real estate in a securitized fashion, where it's not, where it's, hey, it's friends and family basically. You're taking all the risk there, right? You don't know for sure what's going on. I get solicited all the time because of what we do of people, hey, I'm doing some projects. Like, I cannot do that. Everything we do is through the securities industry. Every email we send is viewed, it's captured, right? Everything we do, every correspondence, every video you watch, my broker dealer has seen this before you do, right? So our industry is highly regulated. That's good, right? It keeps out all the bad actors or catches them early on and gets rid of them. I've been in the industry for 40 plus years, actually started in 1979. So, and I have a lot of licenses that are regulated. So, been fingerprinted more times than I can figure. Anyway, there's a lot of due diligence that goes on, and that's important, right? So I have a broker-dealer firm that I work with. So in the securities industry, a stockbroker, licensed representative like myself, a registered representative, I have to place my license with a broker-dealer. And so the broker-dealer I'm with is Concord Investment Services. Well, they have to do due diligence on all of the offerings before I can even see them, right? So they have to go through their due diligence team, not just one person. They have people on the ground that physically go out and look at these offerings. What's there, right? Is it real? So they're going out and they're going through the apartments, they're going through the storage facilities, they're going through them all and checking them out to make sure that they're all real. Then I have to do education on it. Once they approve it, I have to do education on it before you can see it. And in our education process too, I talk to the sponsor companies, and I do go out and see many of these, not all, right? Some of them are pretty straightforward, and I have a relationship with these people. So I know which companies are good. We're not going to do business with some startup real estate sponsor. All of the companies we deal with are big firms. They do a lot of business. One of the firms we work with they manage a $2 billion publicly traded multifamily REIT. They're huge, right? These are very big companies, but we do due diligence on the sponsors and on the property before you ever see it. And then we have to kind of do due diligence on you. I've mentioned this before. You have to be an accredited investor for us to be able to really tell you about these. So I can teach you, I can educate you, but I can't show you one of these projects unless I know that you're an accredited investor. And to do that, we need to have a little bit of a relationship. We need to chat. Great if you're in the Sacramento area, we'll get together. If you're not, we'll do it via phone, and certainly we can do webinars with you to make sure that you're accredited and make sure that you understand this and you understand that it's not liquid, right? So we're going to go through all of those things to make sure that you understand every aspect of this. It is full disclosure, right? We want to make sure that you understand all the risks. I always laugh when I'm working with clients because the first couple of pages are all the things that could go wrong. And it reminds me of the drug interaction disclosures on the drug commercials, right? You got the sniffles, take this medication, your arm might fall off, you might die. It's crazy, right? The amount of disclosure. It's like, no, I don't want that medication, right? So the very first couple of pages are that with ours, right? They're saying, hey, the world could end. Every tenant that we have 400 tenants, they could all leave one day. It's not very likely, but we have to tell you, it could happen. It could happen, right? Not likely, but it could. Anyway, so the private placement memorandum, the PPM, our industry, we try to abbreviate all these crazy long things. Anyway, the PPM goes through all of that. So once we have a conversation and you're at a point where you're actually looking for a property, then we're going to make some recommendations based on what we know about you. And then we're going to make sure you have the PPM to go through, and we'll go through the main parts with you, the parts that everybody really wants to know, which is how much money am I going to make and what's my risk, right? So we'll go through that. We've gone through all of the PPMs. We know what the unique features are. We know the business plan, and we'll go through as much detail as you want, right? A lot of folks just want to know, how's it work, right? And then, but you have the PPM, read it, when you can't sleep at night, it'll help you. So, but it really is this combination of, the securities industry making sure that we're well vetted, that we're real people, that we're minding our P's and Q's, and we're not doing anything crazy with our clients' money. And then also the sponsor companies having to prove that these are real and their projections are real and they can actually perform for you. So there's all of that due diligence and all of that regulation. We complain about it, but it's good. It's good. It keeps the bad people out. It makes you aware of what's going on. We think that it really is the right thing to do. So hopefully that was a long one. Hopefully that really helped you understand our industry, the inner workings a little bit. It's always a little more complicated than even that, but we can have those conversations on the phone. So give us a call, 800-451-2351. You can hit our website at bangerterfinancial.com. Certainly get a copy of my book, Are You Tired of Tenants, Toilets, and Trash? You can get that on Amazon or give us a call. Thanks so much.